What is up, everybody? My name is Matthew and welcome to my channel. Today we'll be talking about if you should buy this new SPAC or Special Purpose Acquisition Company. SPACs this year have seen parabolic gains, but will this one see the same? For anybody who doesn't know, a SPAC is a company that is created solely for the merger or acquisition of another company. Essentially, this is just another way for a company to go public and IPO for an initial public offering. By going public, investors like you and I are able to purchase shares and ownership in these companies. For today's video, we'll be talking about Subversive Capital Acquisition Corp buying out the MJ companies known as Caliva and Left Coast Ventures for respectively $283 million for Caliva and $142.2 million for Left Coast Ventures. This buyout is in the form of stock. Now, both of these businesses are in the Mary Jane business, and we know that after this merger completes, they will be known as the parent company. This deal is set to go through on January 15th of 2021. When they merge in 2021, we don't know what the ticker is going to be yet, but I've heard rumors about it being TPCO for the parent company or gram for, a gram of MJ, right? So, how cool would it be to have a company with a ticker symbol as gram? Because it's kind of iconic. But before we throw any money at the SPAC, let's see how high we can get a subscriber count. No pun intended. But seriously, it really helps out the channel if you subscribe. Just that button down below. Thank you. First, we'll dive into the business model, check out their management team, then see the risky business with this business, and then we'll go to what moves I'm taking. Now, Subversive Capital Acquisition Corp, or ticker symbol SBVCF, is trading at $10 and some change, and they're listed on the OTC markets, which means that they're an over-the-counter stock and they are not listed on any formal exchange like the New York Stock Exchange that you might know. Now, some people don't really like buying OTC stocks because they believe that there is a lack of reliable information about the company, but I think it's hard for them to get into the NYSE just because of the kind of market that they're in and the kind of product that they sell, which is MJ products. Now, Left Coast Ventures, their mission is create, invest, and be part of various MJ companies. They want to acquire as many MJ companies as they can and build up their portfolio of MJ companies. Caliva is California's premium MJ brand, and they are the leader of MJ products in California. California also represents 35% of the overall US legal cannabis market. Caliva is based in San Jose, and that's where I'm from. And if you're from San Jose and you don't know what Caliva is, then you're living under a rock because everyone knows what Caliva is. Now, they do have 7 facilities in Costa Mesa, Los Angeles, San Jose, Oakland, Santa Rosa, and Eureka/Arcata. They have a bunch of storefronts and delivery locations within California, and they have products ranging from vapes, flower, edibles, and wellness products. In fact, for the San Jose dispensary, Caliva offers its own line of high-quality cannabis flower grown on-site in microclimate-controlled indoor grow rooms. So I was actually on Google Maps looking at the San Jose facility, and if you look at the front, it's very small, but you can see there's a whole big building, and I'm guessing in that whole big building, they're growing these on-site, high-quality products. Now, there's so many brands on their website. First, they got Monogram, which is the MJ line by the infamous Jay-Z. And next, they have Caliva, Raw Garden, Kiva, Select, and more. So I was actually reading this article titled Top Cannabis Brands Entering 2020. And 5 of the 10 products that were on that website were actually sold on the Caliva website as well. These products were Stizzy, Raw Garden, Kiva, Heavy Hitters, and Select. Now let's look at the numbers for Caliva.com. They have a $20 customer acquisition cost, which just means that it costs them $20 in marketing and expenses to bring one customer in. They also have a 30% contribution margin, which is how much revenue is left after paying their expenses. So the contribution margin is 30%, which means that they keep $3 of the revenue for every $10 that they sell on their website. They have a 12.5 conversion rate on their website, which just means that 12.5% of people that visit their website are actually buying their products. But I believe this is pretty low and they have more room to grow as MJ can grow throughout the years and become bigger than it is today. But on the other hand, 75% of their orders are mobile orders, which means that more people are buying things on their phones. And we saw this ever since the pandemic hit. Mobile orders and mobile deliveries have been a thing that has been growing. I believe that mobile orders is a trend that's actually evolving, and eventually everything is going to be mobilely ordered. So 50% of their sales are actually direct to consumer brands, which just means that 50% of the things that they sell on their website are Caliva brands and their own brands, which just deletes any middleman that is collecting commission within the process. Now there's two ways that you can get products from Caliva, which would be picking up and delivery. So we know from before that it costs about $20 in marketing expenses to bring in that one customer, but for pickups it's about $65 for average order value. And that $20 is just kind of eating into that $65 that they would be getting in profits. However, I think that as time goes on and the brand gets bigger, they can stop spending on this marketing and they can be able to just have that money to spend into their own products and reinvest back into the business. Now for the deliveries, they say that the average order value is about $100. I think that this is actually very highly scalable and that there's a long-term shift from people just wanting to get deliveries to their houses, because when you buy something online, then you're more likely to buy from your home, and when you're at your house, you have more people that you see every day, so you can buy things for your friends, you can buy things for your family members, and that just creates a whole new system of you just buying things from one supplier and that ships it to your house. Makes your life so much easier. Now let's take a look at the unit economics for one of their products. Now looking at this picture, we can see that we're comparing the current value to your vape to the parent company's value to your vape, and we can see that on the left there is a gross profit of $14.52, while on the right there's a gross profit of $14.52 as well. So if they're able to have the same gross profit as the average market while charging less for their products, then their gross margin, or how much that they're making on these products, is actually increasing and getting bigger. In fact, it's actually supposed to be 73% in 2021 once this launches. So having an affordable product actually just sucks you into this whole ecosystem, because once you start with one thing that's cheap, then you'll want to move up to higher doses, and maybe one day you'll try their premium products and try their premium flower, edibles, and all the other things that they have to offer. So let's talk about the TAM, and I think that their TAM, or total addressable market, is actually going to be increasing as time goes on. In fact, US estimates for the MJ market is expected to grow to $73.6 billion by 2027 and have a compound annual growth rate of 18.1%. So if Caliva is able to capture at least 5% of that $73 billion, then they could be worth a total sum of $3.68 billion. Keep in mind that they're only worth $1.1 billion today. Now, California is the biggest market in MJ, but Caliva is pretty big and has a pretty big reputation and brand in California already. Now take a look at this map of the United States, and this just shows how many states are legal and how many states are not legal for MJ. Now we can see that on the West and East Coast, there's actually a lot of legalizations, whereas more central US, there's not that many. But I think as time goes on, more states will get legalized because the state next to you will be legalized. And let's say these ones are legalized on the outside, then they just start going inwards and inwards until one day the whole US will be legalized, maybe. Well, at least we can still hope so, right? But the trend is that we're going to get legalized in more states as time goes on. So if we look at Google Trends, we can see how many people are actually searching up dispensaries near them. And we can see that this spiked in April to August when lockdown was actually kicking in. So more people are being introduced to MJ just by being at home and doing nothing all day, that they're being exposed and they're getting exposure to these brands. And if they like it, then they'll keep doing it. As for the branding, the CVO is Jay-Z, and he is the founder of Monogram. He states that I'm not a businessman, I'm a businessman, and that just shows the branding power behind this man, and that he has such a following that more people are likely to just try his products. And this is kind of like the same thing that we saw on like TikTok with like people buying Charli D'Amelio's drink called the Charlie, and people are just buying things because of a brand associated with one person. Now Caliva is going to be promoted by Roc Nation, or a hip-hop R&B brand that has people like Rihanna, Gotti, and Meek involved in that company as well. Now Roc Nation has a 1.48 billion follower count, and that is immense. To just reach out to 1.48 billion people through your brand is really, really good, and really good branding for this company. And what do people that listen to rap and R&B like to consume? They like to consume cannabis. Now, if we look at the revenue growth for 2020 and 2021, we can see that the revenue is supposed to be about 80%. And for 2021 to 2022, the revenue growth is supposed to be about 77%. Now, that is a lot of revenue growth. Now, if we take a look at their adjusted EBITDA, we can see that they're not yet profitable, and in 2021 they do plan to be profitable. Now, just the EBITDA just represents the income or loss from the operations of this company. But keep in mind that this is a growth company and we're really focused on the revenues and as they increase that year over year. But eventually one day we want their revenues to turn into profits, so we want to see that they're becoming profitable. And as for this year of 2021, they're actually expected to be profitable, but we'll just have to wait and see. Now let's take a look at their balance sheet. If we look at the total shares outstanding, which is how many shares are on the market available, we can see that there's about 116 million shares. And if we multiply this by the share price of $10, we get a market capitalization of about $1.1 billion. Now, to find the enterprise value or more true value of this company, we can add the debt and subtract the cash. So we'll do that and we get an enterprise value of $614 million. Now we're going to use the enterprise value to create this EV to revenue multiple. And this EV revenue multiple will tell us how much the company is worth in relation to how much revenue it's bringing in. Now, if we look at 2021 estimates, the total enterprise value to revenue multiple is supposed to be at 3.3 times. And if we look at 2021 estimates, the total enterprise value to revenue is supposed to be 1.8 times. And in 2022, it's supposed to be 1 times. Now, we like to see this multiple decrease as time goes on because as it decreases, the revenue is just becoming bigger. Now, if we were to bring this into relation of the industry average, which is about 5 to 6 times for this multiple, then we can see that for 2021 of 3.3 times, we're actually getting a pretty good deal here. Now take a look at their cash. They have about $562 million in cash, and this can just go towards their mergers and acquisitions. Now let's take a look at their management team. Their management team is a super diverse team with experience in media, MJ, finance, and tech. The current CEO or president of Caliva is currently Dennis O'Malley, and he is supposed to move to the COO role, but he's still able to use a strategic vision to run Caliva. Now, if we look at Steve Allen, he is set to be the CEO of Caliva, and he does have a finance background. And his goal is just to focus on investor relations, fundraising, and building out support services. So we can say that they have a very diverse management team with Steve Allen, Dennis O'Malley, and Jay-Z as a CVO, Chief Visionary Officer for this company. But let's look at the risky business with this business, and that would be competition. Now, they already have competition in other MJ products that they have to compete in branding, but I think that the number one competition that they would have would be the illegal black market for MJ. Now, if legalization doesn't go through, more people will have to shop on these black markets where they can get their stuff for cheaper and they can get more access to it without having to pay such high taxes on it. But what happens if the CVO Jay-Z leaves and he takes Roc Nation with him? Then I think that we just see all this branding of $1.48 billion of followers just gone. But I think that long term they'll be able to scale their products so big that their 15% taxes on marijuana products will just be kind of a drop in the bucket for them. I think that long term more states will be able to legalize MJ and they'll be able to just bring out more products and just new brands that are available to more people. Now, if the CVO and Roc Nation leave, then I think that they already have brands that are here to stay and that are very nice, profitable brands. So let's talk about what I'm doing with the stock. And I currently have about 400 shares in this company and have a cost basis of $10.14 per share. Now, if the stock price drops in the near term, then I will add more. And if the stock rises, then I'll hold off on my position. But I think that as time goes on, more legalizations will go through and this brand is going to just grow and grow as time goes on. But if anything changes with the company fundamentally, then I'll reevaluate my position and then I'll just see if this company is still worth holding. But for now, I think that we're in for some sweet gains as long as we hold and keep our mindset for the long term. So let me know in the comment section, do you believe that this stock has potential in the upcoming years like I do? And what kind of stocks do you want to see me evaluate next? This video took super long to make and I hope you really appreciated my time and effort into this video, so make sure you comment down below and hit that subscribe button. So if you like this video, make sure you like, subscribe, comment, and turn on those post notifications if you want to see more content around stocks and investing. Check out the quote of the day because I thought it was pretty funny. And if you made it to the end, thank you all for watching and thank you for your time today and stay high.